Hey everyone, it's Nick Luckby from Mortgage Wellness, once again joined by Peggy
Peggy
Hill.
Hill.
Yeah. So Peggy, another Bank of Canada announcement.
Yep.
Let's chat. As we sit here, April 2024, no change.
No change.
Now, there was no change anticipated either.
No.
So no big surprise for
No.
most people, right?
No.
But what's really interesting about this announcement is that there was a monetary policy release as well. So a monetary policy report.
Right.
Now, you listened to the report, so did I. Tell me what your takeaway is on what Tiff commented on.
Okay. So just for reference, April 2023 was the last time that we had a policy like this. And
1 year ago.
1 year
Yeah.
ago, the Bank of Canada came out and said, everything's great. It looks like we're going to start cutting. Then the housing market went berserk.
Yeah.
And they had to raise in June and July. So fast forward 1 year, we're in April 2024. Bank of Canada comes out, says they hold. He was specifically asked a question, what do you need to see to give us a rate cut? And he said, I see everything I need to see.
Yeah.
But they can't make the same mistake again. They have to wait to make sure this data is solid. And really, that's all it comes down to, because we all feel it. We all know the economy isn't doing as great as it was.
Yeah.
However, they need to be sure before they pull the trigger again, which is why he didn't say absolutely in June we're cutting rates, because again, they have a housing market they've lost control of.
And what's really interesting is for the last year, as we've been doing this series, we've been talking about the Bank of Canada's mandate.
Yep.
Sole mandate of the Bank of Canada is to control inflation.
Correct.
Here we are.
We're here.
We're here.
Inflation is probably at 2%.
We're actually, like I read a report yesterday saying that inflation will likely be at target, so 2%, by next month.
Yep.
Now, all of a sudden, it's not just solely about inflation.
But here's the thing. It's never always been about inflation. And
Right,
that's the
right.
issue. And the one big elephant in the room that nobody wants to talk about is Canada can't really go alone on this. Like we can afford maybe one or two cuts without the US cutting, and they're not cutting. Their CPI data came out this morning stronger than ever. They may not see rate cuts this year.
US CPI,
Yep.
for those watching, essentially inflation, was up 3.5% year over year.
Correct.
Bad number.
It's not the number
Terrible
they were looking
number.
for.
Yeah. Yeah.
And the bond market rally, bond market's up today.
Yeah.
The interest rates in the United States are going up. They're not coming down.
Yeah. The
And
interesting thing about that, though, we've talked about this, is in the States, traditionally, it's a 30-year fixed mortgage, right?
Right.
Whereas in Canada, it's a 5-year fixed mortgage.
Correct.
In almost every circumstance, right? So it's interesting to talk about how, the American government the Fed is not faced with the same challenge
No.
as Canada.
The biggest challenge they're faced with this year is I think they were hoping to get these rate cuts started already because it's election time.
Yeah.
And, anytime right before the election, their hands are tied. They really can't do anything. So I think they were hoping that they could get a couple of rate cuts in before the election rolled out. It doesn't look that way. And the problem is, as Canadians, you say, like, who cares what happens in the States? Well, we do. They are our largest trading partner.
Yeah.
So if we don't have homegrown inflation, guess what? We're going to import it if we drop too much and they don't drop at all. And that's where the Bank of Canada, that's the problem they have, and which is why they haven't done more than they have.
Which means that the dollar will be affected. And then we start seeing
affected.
Americans come to Canadian to spend their money and shop across border and that sort of thing.
And it's great for that aspect of
Yeah.
it, because the Americans will come here and they will spend their dollars
For
here.
sure.
However, with manufacturing, it kills our manufacturing sector.
Kills our manufacturing. It might increase tourism or something like that.
And
but
our
it kills-
dollar goes to the tank.
Yeah.
And it's already ridiculously low.
So, we've talked about how we are typically in lockstep with the States
Right.
on a lot of things.
We're not right now.
We're not. And one of the things that we are also not in lockstep on is housing.
Yeah.
Right? So we know that Canadian real estate is more expensive than American real estate.
We are the worst housing market, so they say, price-wise, in the world.
Yeah.
Like, they have talked about the Canadian real estate bubble for so long.
Yeah.
But guess what? the reason they're not dropping rates right now is all due to housing. And he even said so this morning
This is what I was just going to bring
during
up.
his
Yeah.
policy report. He said the best case scenario right now is they drop rates and the housing market goes crazy, or they keep rates where they are and the economy gets weaker than it should.
Yeah.
So he's
Yeah.
stuck between a rock and a hard place. And for those out there who don't think that the Bank of Canada takes housing into effect, you're wrong. This is all about housing. It always has been.
Yeah. Yeah. It's funny because I look back on comments that we've made before. You know, the Bank of Canada doesn't care what your house is worth. This was the tone 2 years ago. They are solely focused on controlling inflation. And then you remember last year, the conversation turned more to when we start to decrease rates, somebody's going to have to do something about this housing problem.
Right.
But it ain't us, right?
And they were trying to distance themselves from the housing issue because believe me, we have a housing problem in this country.
Yeah.
And I don't care if we're the overvalued bubble real estate of the world. We don't have enough housing.
One of the things that we talked about really recently was when rates come down, they'll have to correct the housing problem through housing policy.
Right.
Things like the stress test,
Absolutely.
you know,
But guess
reduced
what, Nick?
amortization.
They need more houses. And guess what, Nick? They don't even have the cement to build them.
So I was just going to say the real problem is just supply. That is it.
It's always been the problem.
And we roll back to thinking about high interest rates and what that did to the consumer.
They could try to crush demand.
And we have to think about what it also did to the builder.
Right.
The builders weren't building new homes. Everybody knows this now.
The builders won't go get money when the money is expensive.
Money's expensive, land is expensive, commodities are expensive like wood,
Yep.
concrete,
Yep.
glass, windows. There's supply chain issues, there's labor issues. They weren't building homes. So immigration is up.
Yep.
New housing starts, like, you know,
Down.
homes being built, is down.
Yep.
Interest rate costs are up. So if we only fix one element of that problem,
And this is the problem.
right?
This is the problem. So going forward,
Yeah.
I mean, what do we see? We see he was asked directly if he will cut in June. He didn't commit to it. I doubt they're going to cut in June. I think when June
Yeah.
comes around, I've always been a September girl. I've said that since January, I'm pretty sure. But what they'll do is June or July, that's when they'll start talking about cuts.
I'm in the June cut camp.
You are still.
Still in the June camp.
Good God.
Yeah.
This boy.
Now, we had a meeting yesterday with your team.
Yep.
And yesterday you were on the camp of potentially no cuts at all in 2024.
No, I said in the States they are not cutting at all.
They're not cutting.
No.
But that's going to push out the cuts potentially in Canada as well. And
I
I get that.
I do think that we will get cuts in this country. I
Yeah.
think possibly 2.
Yeah.
And I see them coming September and later. But I don't see them coming before that.
So one of the things that we were talking about was that, you know, there's no talk of cuts falling into 2026. It's 2024 and it's 2025.
Yeah.
It's probably going to be 1.5 to 2%. So let's say it's 2. Let's be on the optimistic end because, you know, I'm the optimist, right?
I know you are.
Yeah. So they're afraid of cutting rates too fast and too much because of what it's going to do to the housing market.
They've been afraid to even talk about cutting
Right.
rates. Never mind actually doing them.
It's true. I mean, if they
don't
talk
even wanna
about
talk about it, they're
everybody goes
terrified.
out and buys a home.
And the problems they run into, there's so much geopolitical unrest in the world right now.
Yeah.
So you see the tensions between the U.S. and Iran.
Mhm.
Oil is is one of the factors that play into inflation, and
Yeah.
oil is going to go higher. Oil has gone higher. Gas, it's going to reflect in the gas pumps. It's going to go higher.
And housing is too.
Housing is out of control, and that's the problem. They've tried to keep it down through policy and through high interest rates,
Yeah.
and they haven't been able to even do that. So we've been kind of on,
Yeah.
you know, I would say when I look at my charts, the average home in Barrie is up 6% from a year ago. 6% on an average price really equates to nothing. So we have the same prices we had last year.
Yeah.
We did see a spike up last June and July. We're not going to see it this June and July, mostly because last April they said they were going to lower rates.
Yep.
They didn't say that this April.
But we are going to see an increase. And the increase is going to come as soon as they start talking about it.
Yeah.
Even if they don't cut in June or July and they start talking about it in June or July, there's going to be increased market activity.
And honestly, Nick, we've already seen it. We've seen it in Barrie because we can see it in the multiple offers.
Yeah.
So when we start seeing multiple offers, and they're not across the board, you guys, they are not.
Yeah.
When we hit $1 million, we see a lot of resistance because at that point people cannot qualify for CMHC.
Right.
Their
They need
interest rates are
20% down.
higher. Yeah. So that 999 mark is a real
big
thing.
one, eh?
It's a real thing.
Interesting.
And I don't think CMHC has any intentions of changing that anytime soon.
There's whispers that they're going to change it, and the presentations that they do to our office, they do talk about changing it. But when they talk about changing it, they're talking about changing it in the GTA
Right.
and the GVA,
Yeah.
the Greater Vancouver area.
There you go.
And as much as we like to think that Simcoe County is kind of quasi GTA, it's not.
No.
They're
no.
talking about GTA specific.
Yeah. Yeah.
Where you may not be able to get a condo or a townhouse for $1 million there.
Right.
So let's talk about how things are warming up now in advance of the rate cuts.
So places like Barrie. Barrie has less than 2 months of inventory, which means if we didn't get another listing, we'd have less than 2 months of homes to sell. We'd have nothing left.
Yeah.
Places like Angus. Angus has very low inventory. It's actually even less than Barrie.
Wow.
So, but there's pockets. There's pockets because, when you're trying, take Springwater, for instance. We used to have so many bungalows for sale in Springwater, like Bud's Mill and all those
Snow Valley.
places. Yeah, all in Snow Valley. You don't see those. They're certainly not changing hands right now if you do, because it's a big number. And it's a big number to carry.
Nobody's buying them.
No, because they
Yeah.
can't afford to carry them. So if you're already in there and you've got a decent rate, you're not moving.
Your team reaches out to me all the time. Hey, I have a listing. It's in Snow Valley. It's priced at $2.2 million. Could you run some numbers for the marketing of the property?
Yeah, you don't want to see them.
You don't want to see it because I'm telling you, if someone comes in with $1.5 million to put down on that home, they still likely have a $700,000, $800,000, or $900,000 mortgage, and it's like $5,000 or $6,000 a month.
Yeah.
Nobody wants to see that number.
It's insane.
You literally have to come in with almost cash
Yep.
to be able to afford that home. The home is only affordable to most people if they're carrying a $500,000 or $600,000 mortgage on a $2+ million home.
What's interesting to me is the demographic that's changed. The people that are buying those townhouses and those $600,000 and $700,000 homes. It used to be that was strictly our first-time buyers, and that's who was buying those homes.
Yeah.
It's not the case any longer.
That's not the case
We
anymore.
still don't
Yeah.
have first-time buyers because they're still priced out of this market.
Yep.
However, you see a different demographic. You see somebody maybe selling their $1.2 million home and working it down.
Yeah, we see that as well. And so when we talk about the market warming up, you mentioned something really interesting. Like I talk about the market warming up with my clients or people that I see around the hockey rink, for example, and they'll say, yeah, well, not around me. Like the houses around me are sitting. Because what people need to understand is the really good stuff will sell first. Townhouses, low
Affordable.
price, affordable.
Where more than one demographic can afford to buy it.
Totally. So we're not there with condos yet, I don't think.
No, we have an oversupply of condos.
Right.
They're taking longer.
Yeah. So townhouses, really good detached small homes in the city of Barrie. And when we start seeing multiple offers on those homes, it's getting warm.
And then we'll see maybe the bungalows in Springwater
Right.
start to move.
So what we were talking about, and what I thought was really interesting is you said not until that category, those townhomes, those small detached homes get red hot,
Right.
meaning you can't even buy one in most
Exactly.
cases. They get listed for a day and 20 offers. When those get red hot, the warmth radiates out, right? It goes to Tiny, it goes to Tay, it goes to
And
Springwater.
that's why it's so important to have those first-time buyers. That's why it's so important to have that part of the real estate moving as well as it can, because it radiates to every other price point and every other area.
Let me ask you this. This is a question probably on everybody's mind. If the Bank of Canada did not cut rates in 2024, which
Right.
they're still expected to,
Right.
if they didn't, would houses still appreciate this year?
Well, let me ask you this question. if the Bank of Canada doesn't cut rates this year, what will the bond market do? Because that's a reflection of what the 5-year fixed is going to do.
Well, I mean, there's a lot to that because even though the bond market's been going up, influenced by things like the increase in the American CPI numbers,
Right. Oh, yeah, it's off the charts today.
jobs data, like all these contributors, right? Even though the bond market is up, I've been showing you emails from lenders that the emails that I get every day from lenders saying what? Rates are going down.
It's spring market. I mean,
Spring market.
all the banks are after market share. So they're going to keep, what's interesting though, is back in December when the bond market was at its lowest, I was asking you, why are the banks not cutting? And you said they're saving it till the spring market.
That's right. They're going to eat it all
buffer. They built themselves a buffer. But my question to you is, yes, they built themselves a buffer and the spring market is now.
Yeah.
What happens in the summer? What happens in the fall if the rates don't drop?
Well, the bond market is also reflective of like consumer confidence and sentiment, like general market sentiment, right? People are out, they're buying, they're doing things. The bond market will react favorably, right? So I expect that banks will continue to try and eat market share, even if it's on losing margins. Because like I discussed with your team yesterday, if a bank has $10 billion to lend out and they only lend out half of it, the return on the other half gets cut in half. Right? So they want money working. And that's why you see banks wholesale money to lenders in my industry. We call them monolines, lenders that just do mortgages. They often get their money from banks, BMO, RBC, TD. They're wholesaling their money out because they have so much money on the shelves that if they don't get it out, it returns zero.
Makes sense.
So banks will want to get their money out. They'll want to eat up market share. They'll want to be writing mortgages. And that's why we see big banks, TD, BMO, all of these banks are offering cash incentives right now. Get a great rate on your mortgage, plus get $4,000 cash back when you close with us. Free banking for a year, cash back. We'll pay for your appraisal. We'll give you a great interest rate. Now, data nerds like you and I are looking at the bond market going, this doesn't make any sense.
But it will come home to roost at some point if we don't get the cuts.
Okay, so let's talk about that.
All right.
Okay. So we have never been talking about cuts in 2026. It's always been 24, 25.
Right.
So if we're talking about cuts totaling about 2% total in totality, and we push out the first cut, it just means that we're going to get more in 2025.
That's all. And 2025 is when we really need those cuts anyway.
Yeah.
Because that is exactly when people were getting the cheapest money and their 5-year term is up.
So let's talk about the new CMHC report on that.
Right.
Yeah, you saw it. I know you hated every minute of it.
They're ridiculous.
Well, they're a data company, but what's really interesting is that CMHC, for those who don't know, Canada Mortgage and Housing, it's the household name. If you get a mortgage with less than 20% down, it's insured. You have to pay an insurance premium.
Correct.
CMHC is the largest mortgage default insurer in Canada, also a Crown corporation. Okay. Now, they're also a data company because they're the biggest. They're also usually a conservative data company, but they issued a report saying in 2025, Canadian real estate will hit peak levels.
I don't doubt that.
If I read through it, it says, you know what peak levels are? Peak COVID levels.
Yep.
So when a townhouse was 800,000, boom, back there.
Yep.
I
don't doubt that only because, again, it's all based on affordability.
Yeah.
So once the money gets cheaper, more people will buy.
No question.
Period. End of story.
Yeah.
So what they said wasn't revolutionary.
Yeah.
I mean, when the rates come down, more people will be able to afford to buy. Understandably.
Yeah.
You'll get more money.
Yeah.
But again, I caution my clients because it's really tough to sit in front of a client right now and say, yes, the market is good, because it is. Things are moving.
Yeah.
And then they look at you and they say, but will it get better? And in all honesty, I would say yes, of course it
Totally.
will in time get better. I don't have any inclination when that'll be. I have my gut, but nobody wants to hear about that.
Yeah.
I don't have proof for you. And this market, even for this year, has gone up and then down and then up and then down. And I think that's what we're going to see all of 2024. We're going to see peaks and valleys. So it's not as cut and dry as oh, the Bank of Canada is going down, prices are going up. It's not as cut as dry as that, only because there's external factors that affect the Bank of Canada, and that is the U.S. government.
Yeah. So this report was saying 2025 will hit peak levels. Crazy to think. It also says 2026 will exceed those peak levels.
Again, if they don't, and here's the part that they're missing out on.
Yeah.
We have a lot of bulldozers in Barrie. We have a lot of building going on right now. There is building going on right now.
Yeah.
I think sometimes the builders are a little brain dead as far as what they're building. And I totally understand it. I'm a businesswoman. I get it. You want to put as many houses as you can on a piece of property to get the most amount of money out of it.
Sometimes it's a city mandate.
Understood.
Right? Like there's density requirements too.
But guess what? People aren't moving up here to be on a postage stamp lot.
No.
And that's why that housing is sitting.
Yeah.
It is absolutely sitting.
It's the same with condos. Like Barrie is still not GTA.
We're not.
And, I have a client who bought a brand new condo with a builder. He'll know who I'm talking about when he watches this. And the builder moved his parking space. And it's like, hey, if I'm going to buy an 800 square foot third floor condo with no elevator, right? I sure as heck don't want to also carry my groceries 500 meters to get there.
No.
And there was a time when that was the only real estate available in Barrie.
Yeah. Not the case anymore.
Not the case anymore.
No.
Right? So when people have choice, they'll buy the good stuff. Exactly what we're talking about.
They will. And that's why resale will exceed the new builds.
Yeah.
Because the resale market is reselling decent lots, normal real estate for Simcoe County.
Mature neighborhoods, established
and
schools.
that's what people are looking for when they buy up here.
Yeah.
We are not the GTA.
So tell me what's flying off the shelf right now.
Townhouses.
Yeah.
Anything like single detached properties. We had single, bungalows with one car garage, multiples all day long.
So tell me about the multiples. You list a townhouse, South Barrie, say Essa and Veterans area. I think you just had one of these, so I'm trying not to be too specific.
No.
You list at $599. That townhouse is going to fetch
$675.
Yeah.
So we are seeing, but here's the interesting thing. We've always had a supply issue as far as that kind of real estate goes. And we weren't seeing the bump ups we're finally seeing now. Yeah. So we are finally seeing
that's
the 75.
Big bump.
Yes. The 75 to 100. We were maybe seeing the 10 or 25.
Yeah.
Or just a straight out firm offer.
Firm offer, full asking price.
Yeah.
Yeah. Yeah. We joked about that.
That was golden.
6 or 8 months ago, maybe. Yeah. I was asking about these firm offers or the multiple offers, and you said, just to be clear, multiple offers mean list price.
Yeah.
That was 6 or 8 months ago. That was
Not that long ago.
Maybe 6 months ago in October or something like that.
It wasn't that long ago.
And we were saying, okay, yeah, if you list at $599, that golden offer, that firm offer, the multiples, list price.
Yep.
The person that comes in at list, maybe $1,000 over, they get the house. Now, that term that you use, push up. The push up now, $75,000 to $100,000 is not uncommon now.
It's not uncommon, and we're starting to see it. But it has to be on the right real estate, and it has to be the right strategy for the right place.
So, in summary, no change to interest rates today.
No change.
We know that. The monetary policy report that you and I just I love watching that because it sets the tone for the remainder of the year. Really.
It does, and he gets asked straight out questions he has to reply to.
Yeah. So cuts are coming.
They are coming.
For sure,
again,
they're coming.
We've been saying this for a very long time.
Yes.
They are coming. They're just not here yet.
And don't talk about it.
They won't talk about it.
Don't talk about it. Nobody talks about it.
I actually think this might be the first time the Bank of Canada just makes a cut and doesn't give us any preamble.
Nothing. Yeah.
Nor foreplay from the Bank of Canada, sir.
That's right.
Nothing.
And you remember yesterday you said, when we were talking about this, you said, they won't give us anything. Because if they give us anything,
the market will run.
The market will rally. Yeah. It'll go crazy.
They can't afford it.
Right. So those cuts are going to come. We just don't know when they're going to come. My thought, and I know you agree, is the longer they push it out, in my opinion, the bigger the storm is going to be when they come.
Yeah.
Because if they push it out too long and they need to course correct, because of other economic factors,
Yep.
and they need to do like a 50 basis point cut or something like that, the housing market will take off
That'll
overnight.
send shockwaves.
So increased prices are coming. We know that. Rate cuts are coming. We know that too. Tell me, if I had a house to sell and I wasn't in a rush, would I wait?
Yes.
And what about if I want to buy a house and I'm not in a rush?
If I want to buy a house and I'm not in a rush. So here's a part of the story that gets a little tricky for us, because if you wait to buy a house, I can't guarantee you're going to get one.
So this is it, right? Like, at the risk of sounding salesy, okay, you can get a great deal on a house, the right house.
Yeah, because we're pretty much on par from last year.
Right.
So we haven't lost control of the prices yet.
Yeah, and here's a government agency, CMHC, data company, saying to us.
And they never say stuff
They
like
never
this.
say stuff like this, saying,
Never.
Your house that you're looking at today, that townhouse that was $620,000 last year, is $670,000 this year, maybe $800 by 25 or 26.
Right.
Like, for sure, right?
Yeah.
So you can choose a home right now.
You can.
You can probably get a decent deal on a home right now. The only thing that you're not going to get is a really great interest rate.
You're not. Take a 3-year and renew in 3 years.
Hey, like I hate to go on record saying this. We got a 3-year fixed interest rate first time home buyer yesterday. Do you want to guess what it was? 3-year fixed interest rate insured.
I want to say it was under 5. Was it under 5?
It was under 5.
Wow.
4.79%.
Yeah, I would
3-year fixed.
Roll with that all day long.
And who knows what's going to happen, but that client may at the end of 3 years renew into a lower rate as well.
Our chances are pretty good.
Right.
Yep.
If everybody asks me, and I said, I say the same thing all the time. If that client, for example, was to renew into a 399 5-year fixed at the end of 3 years, that would be fabulous.
Yep.
Everybody would be happy with that.
As opposed to the reverse.
Yeah.
That a lot of people are feeling right now.
Totally. Exactly. Yeah.